Hey guys, welcome back to another video. Well, before I begin, I need to say a huge thank you to you guys. I have had a difficult couple of days, or actually weeks, and usually I try to keep that part not hidden, but kind of in check. Unfortunately, I think I reached the boiling point in the beginning of this week and I could not share my struggles. Now, I know I'm not the only one who's struggling, obviously, and that is partially why I shared the fact that I was, because we are all in the same boat. And I so appreciate the amount of support I received on that post. So again, a huge thank you to you guys for helping me through pretty much my lowest point this year. Now, I don't dwell in self-pity for long. Life is just too short. So let's go ahead and look at some market information. Now, if you're new to my channel, a warm welcome to you. I teach about the trucking industry with a heavy focus on the spot market as well as freight market analysis. So if this is a topic that interests you, feel free to subscribe down below. So I'm pretty sure I'm not alone in saying this, but February has been a pain. Now, February is always a pain every single year, but this year it has been extra slow. So obviously my first thought is, what in the world is driving this insanity? You know, except for the fact that there are way too many trucks in the market. And what can we potentially expect in the future? So today, let's dive into the macroeconomic factors that are driving the freight industry. Ready? Let's go. Now, before we begin and go to the board and look at some charts and data, one of the questions I have been getting a lot is, how is it possible that when there is inflation, the truck rates are deflationary? Why are rates going down? Well, this is because of supply and demand within the trucking industry. For load rates to rise, one of two things must happen. Either a bunch of trucks start leaving the market to reduce that supply, or more freight starts getting shipped to increase that demand. That's it. Now, how that happens is a different story. So let's take a look. So let's start with the supply of trucks or capacity. And in terms of supply of trucks or capacity, there are several things we have to look at. First of all, we have this chart right here by Sonar. Yes, I will attach all the charts down below so you can examine them closer. But this chart shows us total count of tractors, how many trucks are from new fleets authorized for hire. New fleets are those that are 18 months old or newer, and this data is pulled directly from the FMCSA. Now, there is some good news here. So we have 2022 right here, and since around June is when those new carriers started reporting less trucks within their fleets. And you can see that since June until here we are in February, it has been slowly going down. Although in around January right here, there was a small uptick in the reported trucks. Now, this can be for a couple of reasons. Number one, people understand that produce season is coming up. Maybe they're adding trucks to their fleet so that they can catch that usually hot produce season and try to make some money. Let me move it here. There we go. Another thing that might be happening, it's not that the newer carriers are adding fleets to their trucks, but just new carriers are coming into the market. Maybe there's an uptick in how many new carriers there are with at least one truck. Now, this is just for new carriers. So let's take a look at the total situation for the total tractors from interstate for hire fleets. And what we can see when we look at this chart, I'm going to move it over a little bit, and this is until February 9th, we can see that since around April is when they started adding those tractors to their fleets. But now, even though it's still high, since around, let's see, December, wow, that is not a straight line. Since December, we have sort of plateaued, especially since January. January is when we really plateaued. And this is, of course, a nice sign because we can see that trucks are not being added as quickly anymore to these existing interstate fleets, which means that capacity is not being rapidly increased in the total market. Another great sign, and this is a chart by FTR. I will link all of these charts down below, by the way, as well as the links of where I got them. This chart by FTR, it examines how many Class 8 truck orders there are, and we can see that the blue is 2022, and this is the current year, the green. We can see since September, where there was a peak, it has been declining and continues to decline, which means that those Class 8 truck orders are continuing to decline. And this is great news because this shows us that, again, the adding of capacity is slowing down. Now, of course, from all of these charts, we can see that there's still way too much capacity in the market. But what is a promising sign is that some capacity is very slowly evaporating. But one thing I can tell you for sure right now, the higher rates, remember how we talked about the fact that one of two things have to happen. Higher rates for loads will not come from the lack of capacity, at least not in the near future. So our hope is for that volume to increase. So let's take a look at what is driving the freight volume. So let's start with the big one, consumer spending. Why is consumer spending so important for us? Because when consumers are spending more, that means that stores, retailers, they are confident that they will keep selling more. So they start restocking their inventories. To restock their inventories, they're placing orders with the distributors and manufacturers. So the manufacturers are producing more. To manufacture, they need those raw materials, raw goods. And in the middle of all of this insanity is the carrier transporting every piece along the supply chain. So consumer spending is very important. But where does consumer spending start? Well, it starts with consumer sentiment or consumer confidence. How is the average person feeling about their future when considering their own financial situation, the economic outlook, and so on and so forth? Now, here is a chart that I forgot who it's by, but I'll link it down below. But this measures the consumer confidence index, right? So something to note, you can see there are numbers right here as well as on the dots. Any value below 100 shows that consumers have a more pessimistic view or outlook, which is not that great. But what we can see from here, I know you will not be able to see it very well, but I'll try here. So this is from, we'll start right here, from 2022. In January of 2022, the consumer confidence was at 97.62, right? So it was already below 100. So we started a year ago with a pessimistic view of the future. And this is by month, right? So we have January, February, March, April, May, June, July, August, September, October, November, December, So what we can see here is the consumer confidence, it kind of bottomed in July of 2022. And since then, it has been climbing up. Now, of course, it's still below 100, but it has been climbing up. And as of January, it's at 97.28. Now, I found this fantastic chart by geez Louise, I don't remember who, Economic Tracker? Yeah, Economic Tracker, I'm not sure. I'll link it down below. But this shows consumer spending, right? And here we go. This is from February 2022 until February 2023. So we're starting here. And what we can see that consumer spending actually since the beginning of the year, which is right here, it decreased a little bit, but then it increased, although it is decreasing a little bit since February 21st. Now, the good news is that it is not decreasing by much, right? So we can see consumer spending is actually healthy. And according to Reuters, now this is a long one, US retail sales increased by most in nearly 2 years in January after 2 straight monthly declines as Americans boosted purchases of motor vehicles and other goods, pointing to the economy's continued resilience despite higher borrowing costs. And then it continues. Last month's broad increase in retail sales was led by motor vehicle purchases, with receipts at auto dealers accelerating 5.9%. Online retail sales rebounded 1.3%. Furniture store sales jumped 4.4%. Electronics and appliance store sales shot up 3.5%. Now, this is fantastic news because the more consumers spend, the more likely we will have stuff to transport. Now, I do have to mention one thing is that tax season is almost upon us. So because it is coming up, it won't be surprising if consumers start spending less until around May. 2 things are certain in life, right? Death and taxes. So then the next indicator of volume is, of course, industrial production, or more specifically, manufacturing, right? Again, I'll link this down below. I know it's hard to see. So if we look at this chart right here, what we can see since December 31st, there is pretty much an uptick, right? We see this kind of pattern, which is great. That means manufacturing is growing. Now, this blue solid line is the general manufacturing. The other lines are industry specific. So what I want to point your attention to is these two lines. This one, the red one, and this blue one, because these are the two that are outliers. They are, one is still declining and one seems to be increasing, but very slowly. So this red line, this is paper. This is paper manufacturers. This is the one that hit kind of rock bottom and is slowly increasing. And this blue one that continues to decrease, this is furniture. So again, this is paper and this is furniture. Now the one we have to pay attention to, as funny as it sounds, is the paper one, this red line. Why? Because according to Freight Waves, the demand for cardboard boxes as well as other packaging materials fell sharply at the end of Q4 of 2022. Why is this important? Because pretty much everything we consume comes in some sort of packaging, cardboard boxes, whatnot, right? So looking at this paper manufacturer, we can see it dropped quite a bit from November to December, right? But the promising sign is that it is starting to slowly recover. See, this is what I love about economics. A simple thing like a cardboard box can determine the future of the economy. Finally, of course, we have to look at imports when it comes to freight volume, because imports, whatever is imported to the US, we as trucking companies then transport all over the US, right? So right now we're looking at this from March. This is 1 year, right? So from March 2022 until February 2023. And of course, there's no denying it. The inbound volume for imports into the US, it has declined quite a bit. Now, I don't like fishing for good news when there isn't any, but in this case, there is. We can see that since February, we kind of bottomed out right here, and now it's slowly starting to increase, right? So that is very, very promising news. So what are my general thoughts on this macroeconomic situation driving the trucking market or the freight industry? Well, what we can all see from the data is that the situation is less than ideal at the moment. We all feel it, we all hate it, we all can't wait for it to start improving. And I believe the situation is starting to improve. I think from looking at the data, it looks like this month, somewhere this month, we have hit rock bottom. And now things are very, very slowly starting to pick up. For the past month or so, I have felt like the market is in limbo. I don't know if you guys felt the same way, but I felt like February is a month where there was no sharp decline in anything in the market, but there was also no drastic improvement anywhere. Kind of stuck in the middle, at the bottom, floating. Again, I will repeat myself. I believe that in February, we have finally hit rock bottom. Now, what might happen is that for a couple of weeks, we will kind of stay at rock bottom, but then the only way forward is up. Anyway, guys, I hope you enjoyed this video. I'm wishing you an amazing rest of your week, and I will see you in the next one.